Assalamu alaikum, everyone. This is your brother, Dr. Ahmed Ebrahim. My good friends in Mass Connecticut chapter just asked me to prepare the short video, one of two actually. This first one just to explain what's in the new stimulus package that was approved by Congress as a result of this crisis for individuals. And we'll have another short video for small business, anyone who is running a small business or self-employed. First of all, I hope everyone is safe and sound and healthy with their families, inshallah, and we'll go over this difficult time. For individuals, very quick, what's in this package is you hear about this $1,200, $500. So who's gonna get this $1,200 and $500? What are the rules? What you need to know here, and answer the common questions most of the people have. The rules are saying every qualified individual, by definition, will receive up to $1,200, if any. So to be clear here. What's qualifying individual? That's someone who is a resident. So if you are like international student who file what we call NR, non-resident, you're out of luck. You should have a social security number to be considered for the 1,200 or even the 500. So people who, for whatever reason, usually immigration, as you know, who have what we call ITIN, the individual tax ID number, again, they're out of luck. And that person, the qualified individual, should be independent. In the tax return, should be independent, meaning he or she is not claimed as a dependent in another return. For example, a college student or a student or a child in general who's claimed as a dependent in the parent's return is not considered qualified individual. You don't get the 1,200 for that person. You might get the 500, we'll come back to that, if that person is considered qualified a child. So that should be clear to some people. That would be a little surprise to some people that your college student or your child in general who already turned 17, who you claim in your return, will get nothing if he or she is claimed in your return. But again, there's always details behind the rules, but that's a general rule here. So that's who's get the $1,200. For the $500, that's for qualified child. By definition in the tax code, that's a child who is under 17, did not turn 17 yet, and also with social security number. ITIN, if you have ITIN, you're out of luck. That's generally how it will work. So you can do your math here. Let's say single person, just very simple case. A single person file tax return, no dependents, nothing, and you're not too rich, your income is under 75,000. We'll come back to the phase out. The phase out rules here. So you get your $1,200. Let's say another case, what we call head of household. Head of household is a parent claiming one child. So head of household with a child, let's say a child under 17. So you get your 1,200 plus 500, that's 1,700. The case that's usually looked at is marriage joint. Marriage joint, now you have two qualified individuals. That's 2 times 1,200. Marriage joint, that's 2,400. As long as income, we'll come back to that, the income is under 198 or 150, let's say 150, you get the full 1,200 each. Again, if you have children under 17, so it's 500 each. Basically, that's how it works. Now, there is always a phase out in the tax world. Once you are too rich to get benefits, that benefits start to phase out. At some point, it's just gone. You get nothing. So there's a phase out limitation here. So for example, if you are single, once your adjusted gross income, and I want to highlight that it's the adjusted gross income, the AGI, not the gross income. Sometimes these two numbers are the same, but for people who take adjustments, and the famous adjustment is like contribution to IRA retirement account or so, and I will come back to that in a second. So usually in these cases, your adjusted gross income is less than your gross income. So when we apply these limitations, we go with the adjusted gross income if it's different from the gross income. But anyway, if you are single, once your income hits 75, you start to lose part of these numbers, the 1,200, the 500. Once the income hit, it's $5 for every $100 for income. So once your income hit 99, you're out of luck. You do not expect any checks from the government. If you are head of household, once your income hit 112, 500, you start to lose part of it. You will get some, but not the full amount. Once you reach the 136, 500, you are too rich. You will not get nothing. Marriage joint, once again, you hit 150, start to phase out for you. If you are over 198, again, you're out of luck. So there is a phase out here based on the income. And there is a strategy here. If you didn't file your 2019 return yet, there is a strategy that you can follow that might actually increase benefits you will receive. And we will come back to that. Okay. Few things to consider here, and there's a lot of details actually. Some of them are not final yet by the IRS, but there is a general rules and there is the details. One of the details that people need to know, what you will get now is an advance payment for a credit, and that credit actually is a 2020 credit. So that credit, when 1 year from today, when we file your tax return for 2020, we will finalize that credit. But what you are getting now is an advance payment against that credit. So it's not final yet until we finally file for 2020. And that will have, again, next tax season, that will have a lot of implications. We will have to wait and see. And some of these questions are not fully answered yet. So here's what you need to know. The general advice is if you filed your 2019, the IRS will go with your 2019 return to calculate how much money they will send to you. And that's the general advice in the market now. If you didn't file 19, go ahead, file 19 for the IRS to. But I think there is some strategies here. If you didn't file 19 and you will not file 19 before you get this money, but you filed the 2018, so the IRS will use your 2018 return to calculate your stimulus, if you like. Let's call it stimulus, advance payment. So that will create some strategies here, and we'll come back to that in the next slide. But you need to know this, that what you are getting is an advance payment against a credit that is 2020 credit. And when we file 2020, we will complete the story. We will do a final reconciliation, and we see, do you still need get more? Some people might get more. Or those people who never filed for 18 or 19, they will get this money when they file for 2020. Again, that defeat the purpose. The purpose is to rush cash into people's bucket as soon as possible. But for whatever reason, if you never filed 18, 19, when you file 2020, you can still claim this credit. For those some people have income, like mainly Social Security. If all your income is Social Security, you don't really have to file a tax return. What the announcement is, they will go with, IRS knows your numbers and knows your Social Security and everything. They will go with that form. Those who receive Social Security know this form, and they will they will use that as a base to calculate your benefits. However, it doesn't hurt to just go and file your 2019 even with $1, just to be on the system, so to speak, with direct deposit information, routing number, account number for your bank. We'll come back to that, because that will accelerate the process and you get your money quick if the IRS has your direct deposit information, bank information, routing number, account number. If the IRS has no information about you, no 2018, no 2019, you are not on the Social Security benefit system, so they don't know you. You don't expect anything until you wait and file for 2020, as we said. Then your tax preparer should be able to claim that credit. You don't want to do that. Again, you want to get your money as soon as possible. And this is the whole idea from this advance payment. So that create, again, the general advice in the market: go file your 2019, put your bank information for the IRS to use. That's fine. However, I guess you can be a little bit clever here. And again, this is a gray area that there's some unanswered questions. So someone may say, if I let the IRS use my 2018, I might get more money. For example, 2018, my child turned 17 during the year 2019. So 2018, my child was under 17, so qualified for the $500. So the question here, will the IRS look at this? Oh, this child is under 17, so they rush the $500 to you, or they will add a year automatically, smart enough to add a year, and you know this child now is not under 17. That's not very clear yet. But again, you might consider that. Let them do the calculation under 2018 information, and they didn't see what happened. The question that's not very clear here, as we said, this is an advance payment for 2020 credit. So if I do that, then when I file 2020 and the IRS say, oh, this child was not supposed to get the 500, or any other reason in your 2020 return that the advance payment you already received turned to be more than the final credit calculated in your 2020. The question is, will the IRS ask you to pay back that difference? The answer to that's not clear yet. There is some impression in the market that, oh, they will never ask you to pay back this stimulus package, but based on the rules, you might need to pay it back. Some people, again, when they play strategically, they say, okay, even if I have to pay it back, so what? I got a zero interest loan from the government, so why not? You want to be aware of that as you think about your strategies. Part of the strategies is the kid's age. When if I didn't file 2019 yet, if you didn't file 2019 yet, and you say, let's say you have kids over 17, should I claim them as dependents? Now they are not getting the I will not get the 500 for them, remember? But if those who know, you have the 500 credit already in your tax return, maybe or if they have some income, like summer job and somehow I can make the case they are supporting themselves. So if I let them file their own return as independents, now automatically they are qualified. Generally, you can make the case they are qualified for the $1,200. So this one thing you might consider here, especially for kids under 17, should I claim them as dependents, or especially if they have income, as I said, let them file independent return and get their own $1,200, especially if your income is too high and you already phased out, you will not get much of that. This is part of the strategies here that you might like to consider. Every strategy has its own risk because some of the questions are not answered yet, especially what happened finally when we file 2020. But that's one of the things you might think about. Generally, you want to make sure, this is general advice here, you want to make sure that, especially when you file your 2019, to use direct deposit. This will save you a lot of time, will save the IRS a lot of time and cost, will rush your money quickly to your bank account instead of printing and mailing and going through all these difficulties. So that's a general advice here. Some final questions, and if you folks have any question, I'd be more than happy to answer. If you just email me or let our brothers in Mass Connecticut know. If again, we mentioned that if your income, all your income is Social Security, you don't have to file a tax return. What the guidelines so far are saying that IRS will go with the form. That's, they have the form already, the SSA 1099 form you receive end of the year. So they will use that to send you your $1,200. However, to be on the safe side, I believe you might need to just go and file a tax return with just $1 or so, or even with zero, to be on the system and guarantee that you're getting your either 1,200 or 2,400 if married joint or so. As you know, even if I have income, if my income is less than the filing requirements, let's say I am a single and my income is less than 12,200 for the 2019, I don't really have to file a tax return. But especially this year, you need to file a tax return. So even with $1, just go put a tax return in the system to get your money, especially if you are self-employed. Your income is self-employment income. You really need to be on the system by filing a tax return as soon as possible with direct deposit information again. One final question some people ask, okay, this money I receive, will this be taxable income for 2020? No, it's not taxable income. But as we said, we will have the final reconciliation for this credit when we file for 2020. Some people might get more based on, again, their final situation in 2020. Will some people have to pay back part of that? This is, again, the unanswered question. They might. That's why you want to be a little careful here when you play this game. I guess this is the main points we have here. Again, I'd be more than happy to answer any questions if you email me or email the brothers in Mass Connecticut. We'll have another quick video for just small business, self-employed people, some non-profit organizations actually, if they want to take advantage of the small business loan / grant. So we'll have this as a separate recording, inshallah. جزاكم الله خير. السلام عليكم.